Hello and welcome to Cafe Mutual YouTube channel. Friends, the performance of debt funds has revived. In fact, many long-term debt funds are now giving double-digit returns. In such a scenario, should you recommend long-term debt funds? To give us more clarity on the course of long-term debt funds, today we have with us Pranay Sinha, Senior Fund Manager, Nippon India Mutual Fund. Pranay has over 15 years of experience in fixed income investment management. So let's welcome Pranay. Good evening, Pranay.
Thank you for having me over, Nishant, and giving me the wonderful opportunity to connect with your audience.
So, Pranay, I remember last time when we met, you mentioned that India is an island of stability in this volatile world. So, does this statement still holds true, considering a lot has been changed since then with respect to macroeconomic environment? What is your view?
Yeah. So broadly, the statement still holds. Obviously, as you are aware, that some things have changed, in particularly in terms of CPI inflation. We have seen some kind of spikes,
Hmm.
more caused by the disruption due to monsoon to the food inflation part. But apart from that, broadly and in general, the statement still holds. We are growing at 6%, considering what we are seeing in China and Europe. That's a very decent level of growth we are seeing. In terms of CAD and foreign trade, we are at around 1.5 to 2% of CAD, which is again very good. Inflation, we have misbehaved a bit, but broadly, if you see, correlate inflation remains well controlled. So, in all important parameters, we are broadly doing very well.
Okay. So, talking about long-term funds, I mean, what's the utility of long-term fund? Is it good for retirement, estate planning, or leaving a legacy? What is your view on this?
So long-term fund serves multiple purpose. One, as you said, that if you're looking at retirement planning with a steady inflow of cash over a period of time, and you don't want any kind of disruption due to, say, and volatility due to, say, a credit event or any kind of equity kind of exposure. So a sovereign debt fund serves that purpose very well. A long-term debt fund comprising of sovereign debt fund is ideally suited for retirement. Apart from that, you will find that even the long-term GSEC or income funds have over across the cycle have given superior returns, even adjusted for expense. So that is a very good level of returns which we have seen across cycles and for most of the mutual funds. So that's very encouraging for investors who is looking for asset allocation.
Okay. But Pranay, many investors prefer target maturity fund for long-term allocations. So why should they look at long-term duration fund over target maturity fund, according to you?
It's just a matter of asset allocation, right? Because target maturity fund gives you a very good idea of returns,
Hmm.
while long-term debt funds provide you certain alpha over the targeted return, right? If you see the returns of over, say, a short-term fund or a long-term fund as compared to a target maturity fund over cycles, over, say, last 10, 20 years, you will find that there's some certain amount of alpha which gets created again by most of the mutual funds. So that would mean that it's your preference whether you want some kind of consistency and predictability of return or whether you want some kind of alpha. So it's just a matter of asset allocation, and you should pick up whatever suits your need best.
Okay. So talking about Nippon India Nivesh Lakshya Fund, so the fund has delivered 10% return over the last 1 year. What has contributed to this performance, Pranay?
So, just to clarify before I answer it, Nivesh Lakshya Fund is something which we don't recommend people to look a year return. It's something for long term. However, what has happened is that a year ago, interest rate around, and if you remember, around July, August, interest rate peaked. So
Right.
10 year went up to as high as 760, 30-year went as high as 775, 780, even touched 785, 90 levels for now. Now that levels have cooled down a bit from with 10-year at 720 and 30-year at 740 levels. So the drop by around 30-40 basis point across tenor has contributed to the sparkling return for 1 year. Again, we would like to clarify a 1 year horizon even though it's very good, it's not the best parameter to judge such a fund.
Okay. So long-term performance is also good for the fund. So what are the three things that has contributed?
So, as you rightly said, the long-term performance is very good for the fund. The things which have contributed is first the product planning, right? That's the most important thing. The product is very simple, very transparent, and very understandable. So that means that a person who is investing has a clear idea, say 7 year, 10 year, or say 15 year down the line, what kind of return he would get. Second is the discipline showed by the investment team. This fund, as we have communicated, is a passive roll down fund investing in 2042 to 46 kind of segment. And if you see our fact sheet month over month or fortnight over fortnight, you will see that we have adhered to this discipline. So we don't take any kind of cash call, we don't take any kind of active bets in the fund, because this is what we have communicated to the public by and large, and that's what we have committed to do so.
Okay. So Pranay, Nippon India also follows fund casing with respect to fund management. So can you highlight what is fund casing and how it is helping you managing Nippon India Nivesh Lakshmi Fund?
So fund casing is a kind of framework which we have established over and above what SEBI prescribes us to do. So as you are aware that SEBI says that, say, I'm just giving you an example, that you can only invest 10% of a single issuer in a fund, right? It can go up to 12% with board's approval. So that is the kind of format SEBI has. Just to give you a perspective, for us, that limit is 7.5%. Why do we have those kind of limits? Is to instill a discipline which is over and above what SEBI prescribes to the fund manager. Similarly, we have similar kind of limits for each fund, which is obviously different for different funds on duration, on liquidity, on concentration risk, and all kind of on credit risk, and all kind of risk parameters have been given a discipline which is what is over and above what SEBI prescribes. And these disciplines are hard coded in our system so that the fund manager has to adhere to it. So what this does is that this gives a discipline to the fund manager, number one, and it communicates to the investor what kind of fund he is investing in, right? If a person is coming into a banking PSU, he might not like a surprise that he is being given a credit exposure, right? So our clear communication is very important, our transparent communication is very important, and obviously it binds the fund managers also to the discipline. What we have found is that risk taking within a certain broad discipline delivers alpha over multiple cycles. So this is the experience which we have had, and this is what we have implemented on our funds.
Okay. So Pranay, the scheme has the highest exposure to sovereign debt at 97% as against the category average of 92%. So what's the reason for this?
So we have communicated to our investors that this is going to be a passive roll down sovereign fund. So to that extent, we have, as I said, we have adhered to the discipline. What it has meant is that we have 97, 98% of sovereign exposure here and 1-2% of cash just to manage the liquidity aspect of the fund. So this is a discipline which we have communicated with the investors, say 5 years ago when we launched the fund, and this is what we have adhered with utmost discipline throughout its history.
Great. So one last question, Pranay. How is Nippon India Nivesh Lakshmi Fund different from other long duration fund? And why should MFDs recommend this fund to their clients?
So for one, this is a trailblazer fund, as you are well aware. It has one of the highest AUM. It has one of the most disciplined approach. And it has the highest history of most of the funds. So this is a very big reason for distributors to look at this fund, because it gives you a sense of history, gives you a sense of discipline, and it gives you a sense of confidence that the fund manager and the investment team is committed to deliver what it has promised. Second is that the messaging and the design of the product is very clear cut. So an investor who is coming has a very clear cut idea that what he is getting into and to what investment horizon he should be committed to. For example, we talk about that the investor has to come for at least 7-8 years to get the full benefit of the fund design, right? And we have remained committed to the fact, and we have in fact told people again and again, despite obviously the temptation being that you get money for short term, but we haven't gone that down that route. We have recommended to people again and again that if you are coming here, you should come for at least 7-8 years. So that kind of discipline, that kind of clear cut messaging is something which might not pay off in the short term, but it's very beneficial for the investors in long term. And similar is the thing, and if the investor is happy, the distributor would benefit. So to that extent, I think that's the reason why distributors should recommend this one.
Okay, so with that, we have come to an end to this interesting session. Thank you so much, Pranay, for your valuable time and insights.
Thank you, Nishant, for having me over.
Finally, I thank each one of you for being such a wonderful audience. Stay tuned, guys. Bye.
Bye. Thank you.